right, what's going on, guys? Welcome to the Jim of All Trades channel. Glad you made it by. My name's Jim. I'm a crypto trader and a Forex trader here to help you understand the market from an Elliott wave perspective. Guys, it's Traditional Tuesday. Traditional Tuesday. What we want to do today is just kind of look at the markets here from a traditional TA perspective here, guys. So let's jump in. Don't forget, I'm not here to give you financial advice, just showing you the way I see it. Did I already say that? I don't know if I did or not, but there it is twice. All right, let's jump in. We're going to look at Bitcoin here, and I'm going to show you just the way I look at Bitcoin's price action here, just from a traditional technical analysis standpoint. 15-minute chart is a fantastic chart to pay attention to. What we like to look at on the RSI, and that's what I want to talk about today, is the RSI, and particularly something called hidden divergence. A lot of people know about regular divergence, and that's what we call reversal divergence, where the RSI will create a divergent pattern with price, and usually indicates that there's a weakening of a movement and a reversal coming. All right, I think most people know that. However, I think a lot of people don't know about hidden divergence, which is a more powerful divergence on the chart. Divergence is when the RSI's movement of the graph differs from the price. It is divergent from the price's movement in a way that shows continuation of a move. Okay, and so that's what we want to pay attention today is hidden divergence. Let me give you a couple examples here of hidden divergence. So go out to the 4-hour chart. You can see a couple of really nice examples of hidden divergence. One prime example here is you had the RSI coming down saying, hey, we're in a corrective state. Price movement is corrective, in other words, bearish, right? So the RSI's indication is like we have seller momentum in the market, okay? And certainly we did have seller momentum, but notice that while the seller momentum was measured by the RSI as a downward movement here, and a pretty steep downward movement, notice that price went relatively sideways comparatively. In other words, when you compare the previous peak, for instance, of the RSI here, the bottom peak, okay, and price movement or the RSI's movement to the top, okay, we're going to compare that last peak with this peak, this low, okay, that was created. In other words, a low is created here and a low is created here, and those relate to lows on the chart. That the first low right here in price comparatively to this low, and the second low in price comparatively to this low. And what you'll notice is that you actually have a downward sloping a downward sloping line there comparative to an upper sloping line. In other words, very simply, as momentum was compared, okay, as the momentum of this movement down was compared to the previous price action to the upside, okay, it was actually had stronger momentum to the downside, okay, as far as sellers. How do I say it? Not stronger momentum. The momentum oscillation here was comparative, let's just say it that way, to the previous move to the upside, okay? And it even took out the low. In other words, it got to a stronger area on the low side of things. But as the sellers were pushing and their momentum was gaining, they weren't able to move price at all. In other words, seller momentum wasn't as strong as the sellers came in. They could not move price. They could not budge the bears. In other words, this is letting you know as the momentum shifts to the buy side and it starts to move up, it's letting you know we're going to get a continuation move. And that's what we call hidden divergence. It's a continuation divergence. Okay. Now, you had regular divergence here, which is a reversal divergence, where as momentum is moving to the upside here, okay, the sellers come in, okay, but price is moving up while momentum is moving down, okay, and you compare the peaks here to the peaks here, and that's what we call regular divergence. That's letting you know that this move to the upside is fizzling out, that you should expect a larger correction or a larger move to the downside soon. Well, when that divergence came in, great. We did get a correction, right? But in that correction, the sellers weren't able to push price at all. The buyers held, okay? And the price chart, when the momentum shifted, we got a pop to the upside. Okay, so that's a classic hidden bull scenario. Okay, let's look at another hidden bull scenario here on the chart. That's very powerful. What you'll notice here is you have a correction in price. So the sellers are coming in on a correction here. Okay, creating these lows right here in price comparatively to this low right here. Okay, what you'll notice, this low makes an upward slope. Same low in the chart makes a downward slope. That's hidden bearish divergence. Okay, it's not as powerful as this divergence that you're seeing, but what you want to look for is what you want to see is price not giving up its territory while the RSI is giving up its territory. It's oscillating towards the bear side. So as you look in the smaller time frame, you can see that hidden divergence playing out all the time. Okay, for instance, right here, we had a this is super interesting. The way this moved, we had regular divergence between those waves, letting you know that this is a wave 4 of a smaller degree, and this is a wave 5. That's divergence between the wave 3 and wave 5, and that's letting you know we're due for a larger correction. Well, we got a larger correction. That's another wave 4. Okay, so momentum came down, but price went nowhere. It went sideways. Okay, when you compare this bottom peak here to this bottom peak here, okay, or the bottom of the RSI, what you'll notice is that the same peaks make divergent slopes. In other words, divergence in momentum was stronger to the downside, while price wasn't able to move comparatively. That's hidden divergence, letting you know there's going to likely be another move to the upside. And certainly we got one. Now, that doesn't mean this couldn't have come down a little bit first and then gone up. Could certainly have done that. And that's often that's what happens. It gets oversold, and then you have a very stronger, much more identifiable hidden divergence. But nevertheless, there's divergence there in the 5-minute, and that's hidden divergence. Most people can recognize the regular divergence, okay, letting you know there's a correction coming. It doesn't mean it has to make a new low or the price has to go forever and ever down. It just means that there's more in the Elliott world. This regular divergence is made by two different patterns. Number one, the difference between wave 3 and wave 5. Okay, 5 hits and then you get the correction. All right. Or it's made by an expanded flat. So that kind of divergence is made by those. So anyway, there's regular divergence. That's what we often call reversal divergence, but it doesn't always mean that, especially depending on the degree of the wave that you're looking at. Now, what we see here is beautiful. We had another correction to the downside. Momentum on the 5-minute was very strong to the downside. Okay, it even surpassed the previous momentum of the wave. However, what you'll notice is that the bottom peak of this price and the bottom peak of this price, upward sloping line. In other words, price wasn't moved very strongly, whereas the RSI pushed it down, letting you know that the bulls are still in control at the moment. Okay, we had a downward slope and an upward. That's hidden bullish divergence, letting you know that the RSI is resetting. Okay, but price is not resetting. It's continuing to hold its power. Even though we had a strong move, it found a reversal. It broke its structure back to the upside, and sure enough, we got the move down. So the question is, what are we getting now? What's happening now? How do we read it? Okay. Well, what you'll notice is that the RSI hasn't finished resetting. My guess, based on Elliott wave structure, is that we're going to likely see a move to the downside like this. There's a little analysis I did that's kind of tricky in here. That may not play, but it could play. Okay, and this would give you a 3-wave move. Okay, and that would be allow this correction to finish. momentum to shift down. And what that would create, and then if we find a pivot here, is that would create a lower low on the RSI and a higher low, much higher low. And that would be hidden bullish divergence, letting you know we're ready for another move, potentially to the upside. All right. Now that doesn't have to play. We could get the move now. Okay. We could certainly, this could make its way up from here and make another move to the upside. And if this breaks structure, that's fine. Okay. But there's a tricky little Elliott wave in here that I want to show you that may be pointing to the downside a little bit right now. But you know, it's kind of, I don't know. Let me talk about it with you. So low hanging fruit. What you want to say is that, yeah, we got 1, we got a 2, 3. Here, let's go up for 4. So that's what you want to say, and that's valid, and that's right, and that's good, and that's a fine count. Okay, so not a bad Elliott idea there. Okay. You'll notice that it's even developing some hidden divergence here. So if this comes and makes another low right here, okay, you have an impulse wave there. You have a 3-wave move here. RSI is resetting, creating a lower low and a higher low. That's hidden divergence. We could expect a move to the upside. Okay, so that's an example of the way it might play out on the very small time frame on the 3-minute chart. Okay, it's kind of letting you know what's going on in here. The RSI is, however, it doesn't have to happen because it can RSI can become well oversold. So in other words, if this starts coming down and creating a lower low like so, all right, then we have an interesting wave here. We've got an impulse wave, and then we have a flat right here, and it's a running flat. Good on the market makers for that running flat, because it kind of makes it look like it was a 3-wave move and then a reversal, but instead they gave you a running flat B wave right here, and now we're getting a C wave to the downside, and correcting this move here, 3-wave move, then one more spike to the high, potentially. Now I don't know if that's going to play or not, but it's what we call an Elliott wave idea. In other words, as I look off into the blank space here and I look at this wave structure and I look at the RSI, I say, okay, what kind of wave could happen based on known wave structures that I ordinarily see in the market? And that's a little bit of a tricky one. It's not readily seeable by most people. Okay, you've got to really have a lot of time in the market to see this, because I didn't see it readily, but yet here it is. Okay, so we've got an A, we've got a B, and a C. That's interesting right there. That's an interesting wave right there. Okay, then you have an A, a B, and a C right there. Okay. Now you have a 3-wave A, a 3-wave B, and a 5-wave C. That's an impulse. That could be right there a running flat. So how do you put it together? Well, you've got an impulse wave, this running flat as a B wave. Now we could be in a C wave to the downside. Okay, come down, stop hunt this low. Everybody's looking for it to go up again because that's all it's been doing, right? It's been going, price has been going sideways and up, spike, sideways and up, spike. Well, now they're kind of giving you the same look. Let's go up and spike, right? No. Let's come and stop on everybody first. And let's spike one more time. Okay? So when you learn how to read Elliott waves and you put that together with an RSI analysis, you can really, really begin to kind of look out into the future and say, hey, what is real plausible here? This is a trade idea for you guys. I mean, in other words, this is a potential movement of the market that if this happens, I'm not here to say it's definitely going to happen, but it's an idea. It's a way to interpret these waves. And if this plays, it may not play because there are other interpretations of those waves. But if it does play, then you have a potential long setup to take a long for another spike to the high. And then what I would be looking at is I would say, okay, then this becomes a wave 4 of the larger degree. All right. So in other words, of the larger degree here, let's see if I can get it on the screen. This comes down, stop hunts the low. Maybe, maybe not, maybe. You've got a 1, 2, 3, 4, 5. There you go. I mean, that's a potential. I'm not here to say that's a certainty. That's not a certainty. That's an idea. And that's what LE Wave is good for. It's good for trade ideas, right? And interpreting the past and then guessing the future and looking for potential trade setups that might develop. That may develop. It may not develop. But that's the way I'm reading this. But if this comes down, and it comes down sharply over the next short amount of time, then what that's going to do to the RSI here on the hourly chart, it's going to reset the RSI down here somewhere. It's going to provide some hidden bullish divergence and get us ready for that last wave. But when that last wave comes up, it's going to probably provide some bearish divergence between top of wave 3. This was a wave 4, and then you get a wave 5. And this may be one of the last moves we get of this particular wave before we get another correction. Could be a reversal even, okay? Could be a reversal. So let's watch and see how this develops. Okay, guys, so hopefully just that helps you think about how to read the RSI a little bit in conjunction with wave structure. And you can do that on any market, whether it's crypto or traditional markets, whatever. That hidden divergence is powerful. It's letting you know we're ready to keep going. When you see that hidden divergence on the 15-minute, on the 5-minute, on the 1 hour, especially the 1 hour, you know that there's another large move coming. And right here, for instance, on the hourly chart, you see an upward sloping trend here between price, okay, and the RSI is going down, okay. That's letting you know the momentum. The sellers came in, but they couldn't push price lower than the previous low, okay. Yet the seller's momentum went lower than the previous low, letting you know there's bullishness here, and it's hidden from most people. They don't see it. It's hidden. So that's what we call a hidden divergence. Okay. You can also have hidden bearish divergence, which is just the opposite. It's just the opposite. When the bulls come in and can't push price higher, all right, that would be hidden bearish divergence, letting you know there's some bearishness still in the market. All right, guys. Well, there it is. I hope that helps. I hope you enjoyed that video. Let me know if you did in the comments. If you made it to the end of this video, let's have a fun phrase in the chat. Just find a way to put the word magnificent in your comment. If you just use the word magnificent somewhere in your comment, that'll let me know you made it all the way to the end of the video. Hey, thanks so much. Enjoy the rest of your day. Hope that helps you. See you tomorrow for another video for Wisdom Wednesday. Talk to you later. Bye-bye.